Joining now on the line from Sydney is Joe Capurso, currency strategist at Commonwealth Bank of Australia. A very good morning to you, Joe. If I can ask you first of all, your big call this week, which currency do we follow?
This week might make a new post-float record, so that would have to be just over $1.10 and 0.12. There's a number of local events pushing up Aussie this week, and first up today is the retail trade report. We're well above consensus at 0.6%, and of course you've got the Reserve Bank of Australia meeting tomorrow. I don't think they'll pull the trigger, but they will certainly warn that a rate rise is coming, and that's just not priced into the market at the moment.
We've had a lot of interest on the Aussie, from, for example, the Russian Central Bank cutting its US Treasury holdings, putting their money into the Aussie, Latin American investors, European investors. Do you think it's the currency of choice in Asia as regards the risk-averse currency, the safest bet?
No, Aussie isn't the safe haven currency, or at least not yet. It does have a lot of very good qualities that central banks like, and among those is a AAA rating, very high liquidity. The Aussie, as you know, is the fourth most traded currency in the world, and of course we have very high yields on our government bonds. So there is a lot of interest among central banks to have exposure to the Aussie, and that's one reason why Aussie is trading at these very, very high levels.
And Joe, has that intensified, that interest, has it intensified in the last few weeks, few months because of the global crisis?
Well, judging by the number of trips that we have to do all over the world, I guess you could say it certainly is intensifying. Yeah, we're always suffering jet lag nowadays.
Now, you could argue that against that, looking at the euro again, of course, Greece gets their tranche, the fifth tranche of the 110 billion euros. But what is your take on the euro right now? Where does it go? Because it's holding up pretty well considering what's going on in the European zone.
Oh, that's right. I mean, the core of the European economy is quite strong. And that is making the ECB focused on fighting inflation. Now, we and pretty much every economist expect a rate rise this week, and we also expect a follow-up in October. And that's part of our long-term forecast that we've got for euro to touch $1.50 this quarter, and it could even get beyond that if the ECB pulls the trigger again this quarter.
And how does the rate rise, which again is widely forecast this week, and also you mentioned in October, how does that change your strategy on the euro? Is it the right move for the ECB to do?
I think it is. There's no point having letting inflation get out of hand. That's only going to make the job of fighting inflation down the track even harder and cause the ECB to raise rates more and cause an economic contraction. So you certainly don't want that to happen. Another thing pushing up the euro this week and over the next few months, we think, is that the markets are now going to start to focus more on the US debt ceiling. The Congress and the administration just can't seem to agree on addressing that issue. Now that Greece has sort of been dealt with, at least temporarily, that have faded into the background, and I think we're going to see a lot more US dollar selling over the next few weeks.
We've also got jobs figures out on Friday with the US again. You mentioned, of course, the debt limit again. It really is a massive concern. The eye of concern really is focusing now more on the US than almost the Eurozone. I mean, you say it's going to be setting off in the next few weeks. Is it going to be big weakness, do you think? Significant weakness?
Look, I don't think it's going to be a messy sort of weakness. I don't think volatility is going to spike up. But I do think that the US labour market, we're going to get two monthly bad numbers, I think, now. And that's going to concern markets, and that should see those US bond yields at the longer end start to come back a bit. And the euro, as a major alternative to the US dollar, is going to push higher. I could see $1.48 happening this week.
Joe, time's against me. Joe Capurso, thanks for joining us this Monday morning. Commonwealth Bank of Australia.